Right. Okay. There
Hi,
we go.
everyone. Welcome to this awesome Zoogla community meetup with James Green. I'm so glad our friend Grace, who has been organizing the ex-Facebook alumni community in Southeast Asia, introduced us. As all of you would know, whether it's watching this live or the video, a lot of people are trying to think of what to do with their careers and next steps, but they can't, for many reasons, quit their day jobs. And so that's where we're here to learn from James how you can do both. Thank you, James, for preparing the presentation and answering any Q&As we have from the community. So glad you're taking the time out to chat with all of us. And I'll turn it over to you, and I'll come back to moderate the fireside chat in a bit.
Okay, thanks, Chris. All right, I'm just going to see if I can share my screen here. So just give me a second. Right. Hopefully this works so you can see me and can you see, are you seeing it yet? If I get rid of that. Now, where have I gone? Where's the Zoom window? I usually use Google Meet, so Zoom is a little bit unfamiliar to me, but I was hoping that you'd be able to see me and the presentation, but clearly not. So let me just...
I guess you expand the presentation then. Oh.
Yeah, I'll just share the presentation instead. Just 2 seconds. Right. There you go. So can you just see the presentation now? Yeah. Okay, great. So just before I start, I'll tell you a bit about me. Unlike you guys who managed to find a job at one of the world's best companies, I never had a proper job, really. I've been an entrepreneur pretty much my whole life. After graduating, I went into a sales role and very quickly realized that I didn't really like working for someone else, and went traveling for 2 years. And when I came back, I decided I was going to go and live down by the sea in the southwest of England and buy a windsurfer and write copy. I'm an English graduate, so I was going to write copy for advertisements and not worry too much about how much money I earned, but have a nice life. But I ended up joining an agency, which after 3 months, I became managing director of. Somehow, I realized that I was much more ambitious and entrepreneurial than I had thought I was. And I was much more entrepreneurial than the people who were already in the agency. And through a little bit of determination on my part, but also from them being willing to step aside, they let me take over the business and run it. And we grew that business, and I managed to sell out. Actually, there was a management buyout, which helped me exit. And that was my first experience of the benefit of owning shares in your own company as opposed to working for somebody else. And I'm sure if you work for Google and you got there early enough, you probably get stock options, so you experience the benefit of ownership yourself. But for me, it was a real eye-opener. I earned way more money from the ownership than I did from my salary, and I decided that that was the way forward. So fast forward over the last 25 years since then, I have owned shares in many, many different companies. I think probably over 100 different companies now, some of which I've bought as an angel investor, some of which I've earned as a founder. And I've had some good results and some not good results, teaching me the importance of diversification. But overall, I feel that starting your own business is by far the best way to make life-changing wealth, and also to do that while working on something that you care deeply about and that you're deeply passionate about. So during my journey, I realized that actually, as an angel investor, the people that were the best people to invest in and usually gave the best results and the best returns were older founders, not younger founders. They weren't the 20-year-olds coming out of university or having done one job and deciding that they wanted to be a startup founder. They were the older people who had cut their teeth throughout a career, made some amazing contacts, made some gained some deep industry insight into something specific, and knew exactly what the problem was that needed to be solved and knew exactly how to solve it. The problem is that those people, like probably a lot of people in Google, have a lot more to lose by starting their own company. They're earning a big salary. They probably live in a nice house with a large mortgage. Maybe they drive a Tesla or a Porsche or some nice car. The family is used to going on nice holidays. They have medical expenses or medical insurance that needs to be paid for. A lot of these things tend to be provided by large companies and large salaries, and aren't provided by being your own boss and being an entrepreneur. So older people have a hell of a lot more to lose by starting a company, which tends to mean that they don't start companies. By the time somebody reaches late 30s or early 40s, they're far less likely to start a company. But if you look at the data, they're actually far more likely to be successful. So at DQventures, we decided that we wanted to help these older people to start companies. And because the certain aspects that are holding these people back, like the responsibilities that they've accrued, maybe they've got children that they need to look after. They have a higher level of expenses. They have a higher income to protect. Their age means that if we're honest, it's going to be more difficult for them to find a job once if they need to go and find another job if things don't work out. A lot of the people that we work with at DQventures are women, and we know that women they receive a very small amount of the funding that's out there. If people who are building startups the old-fashioned way with VC funding, maybe they're in a location that's not particularly suitable for starting a company, or lots of other reasons why people find it difficult to start their own company. So that's why we started DQ. And the reason that we did that is that the current ecosystem for starting a company, it's quite simple, quite straightforward. There's really only two ways to go. You either bootstrap your own company, which means you don't go for external funding, you do it off your own back, you grow it from scratch, grow it slowly and steadily, and ultimately try to get to profit as quickly as possible before burning through too many of your own savings. Or you go the venture funding route, which means coming up with an idea that is truly world-changing and convincing a VC or several VCs to back you, and then trying to deliver on that vision in a way that keeps both you and your shareholders satisfied. Both of those routes have disadvantages, especially to somebody who is further on in their career and life. Bootstrapping takes a long time, or it can take a long time. There are obviously examples where people reach profitability and grow quickly. However, most bootstrap businesses could take 5 years before they're paying you any kind of salary that's anything like what you're earning currently in your day job. Venture funded businesses are, you can pay yourself from day one if you raise enough capital. You probably can't afford to pay yourself the same kind of salary that you earn when you are working for a company like Google. It wouldn't go down well with your VCs, and they want you to have some skin in the game. But the venture route is extremely risky. Only a tiny fraction of startups that go the venture route actually make it. And it does mean that you have to go all in. You can't raise venture capital and continue in the day job. So you have to ditch what you're doing, jump in, knowing that there's a low chance of success, knowing that you are giving away control or a certain amount of control to your investors, which is almost always the case. And so for somebody later in life, both of those routes are extremely risky. And if they don't work out and you need to go back into employment, it may be too late to get your old job back or a similar job, because as we all know, older people find it harder to find work. So we've created this third option for experienced professionals, which is a de-risked option. And under that option, the entrepreneur essentially retains full control of their business. They have low opportunity cost. Excuse me a second, sorry. Yeah, so they have low opportunity cost, a much lower risk of failure, because the failure tends to happen before the entrepreneur has quit their day job and gone in full time. And they get lifelong support from co-founders who've been there and done it before alongside them. And we do this for these experienced founders because they are dramatically more likely to succeed as founders. So I think it's something like, it varies with age, but there's a lot of research on this. You can Google it and you can find it and read it yourself. But there was joint research done by Harvard and MIT, and there's multiple other research that's been done on the back of that show that older founders are more likely to succeed. And actually, some other research that's more recent shows that the older you get, the more likely success becomes. So a 60-year-old has more chance of success than a 50-year-old, and who has more chance of success than a 40-year-old, and so on. So we feel that by adopting this business model and starting companies with these more experienced founders, it gives us a better chance of a return as a company investor, which is essentially what we are. We're a little bit like a VC. But we get to work with people who understand their industry and have that unfair advantage that mean that we have a higher chance of success. Okay. So what do we actually do? Because I think this is probably the part that I've seen some of the questions that came through before this webinar. What do we actually do? So our whole business model works that we expect to invest about 10 months of our time, somewhere between 6 and 12, but it tends to result in about 10, which on founding the business alongside the founder, but the founder actually stays employed, and they don't actually give up too much of their time. And I think this is a part that surprises a lot of people, that in the very early days of a business, there is a lot of work that can be done that doesn't necessarily need the founder and doesn't need somebody to be full-time. And so founders who do quit and go full-time often find that there are long periods of time where they didn't really have that much to do, because they were waiting for a customer to come back to them. They were waiting for an investor to come back to them. They were waiting for a product to get built by somebody else. It depends what your skill set is, but there can be a lot of waiting around. So we basically break up the things that is actually absolutely essential for the founder to do and the things that somebody else can do. And then we do those things that the founder doesn't necessarily have to do themselves, which means that the founder can participate after work in the evenings, maybe an hour or two a week, or ideally more, but an hour or two a week, and then maybe some time at the weekend. So the whole point is that they're not having any negative impact on their day job, because the last thing that we want is for the founder to get fired or to have some kind of problem with their main source of income. One of our values at DQ actually is that we will always act in the founder's best interest, even if it's to the detriment of DQventures itself. Our reason for doing this is to help people. So the steps of starting the business that we tend to take are, first of all, interrogating the problem. Often we find that founders jump in with a solution, but they haven't thought that deeply about the problem. But there's a well-known saying that you need to fall in love with the problem, not the solution. And I think if you talk to any founder, I know we've got some founders on the call, their solution is probably not today what it was at the beginning and what they thought it would be. And I think that's true for every business that I've been involved with. It's the solution or the product is always different than the founder initially imagined. We do help to build a minimum viable product, but we call it a minimum viable business, because often when you talk about an MVP, the founder in question generally just envisages their product. They're forgetting the minimum and viable part, and they're just envisaging the product. So we're saying what is the minimum viable business? What do we need to do to prove that there is a need for this vision that you've had? And let's build that. So our MVPs or MVBs tend to be much simpler than a version 1 of a software product. It could be something that we pull together in other existing software. We're big fans of Airtable, Flutter, Webflow. We use a lot of no code. So we'll pull something together that serves the purpose and solves the problem for the user, probably in an inelegant way, but solves it in enough of a way to prove that there is a real market need for this product. And I would say that our strength, and I think probably the thing that every founder needs to focus on more than they do, is distribution. So we have a very strong distribution bias, which means that we're much more focused on sales as a percentage of the time that we spend than we are on product. And that often means selling before we have a product. So we set up a lot of user interviews with potential customers. We call them user interviews, but effectively they're pre-sales calls to find out exactly what that customer's problem is, what their need is, what their appetite is to pay for a solution, and what that solution would need to look like if they were going to pay for it. And we work on those calls all the way through to closing the first deals for the customer, and where cash changes hand. Ideally, we're fulfilling that with some kind of MVB. It could be that we're fulfilling that need manually, so that the founder is doing something, or we're doing something that is not scalable, but it does solve the need in the short term. And then once we've created that level of proof, only then are we incorporating a company, potentially raising capital, and having a conversation with the founder that here's the level of proof that we've managed to produce. Do you feel enthusiastic enough to quit your job and to come in and run this thing full time? So that's usually about a 10-month process, throughout which the founder is staying in their day job. I'll give you a few examples. I won't run through our entire portfolio, but we've signed up, we've worked on or are working on 19 companies so far, and it's taken us 3 years to get there. So we started pretty slowly. Nobody knew us, but now we're slightly better known than we were. And our probably the 3 that have done the best are Zen, which is a branding company, and it provides instant branding for busy professionals. It's a SaaS platform, and the founder is the business is growing. They're getting a lot of their business actually via SEO, amazingly, and they've raised $500,000 at a $5 million valuation, which was pretty punchy, but they did well. And I say that pretty punchy. They're based in Australia, so that a $5 million pre-seed valuation is considered extremely high outside of the US. Inside the US, I imagine it's probably low, but certainly not in the markets that we focus on. DealerDoc in the UK, they raised $400K at a $2 million valuation, which is probably more standard, and they're a software platform providing sales insights to car dealerships. The founder of that is an ex-car dealer. And Dualix is based in Singapore, which is where we're incorporated. And they actually, the founders, the 2 guys, a German guy and an Irish guy who's living in Singapore, they came to us with an e-commerce idea. And we didn't particularly like the e-commerce idea, but we tried to validate it, but couldn't. And we actually had a problem. We had a problem with our own company admin and incorporation. We'd been through a number of suppliers and found it extremely difficult to find anyone reliable. And so we asked them if they would be interested in building a company in that space, which they have done. And we were client number 1. And now they have about 500 clients. They're profitable. They're growing at about 30% month on month. They're absolutely killing it. And a lot of that, it's a fairly traditional business, but they are quite digitally minded. They're bringing a product mindset to a service business. And so they are using technology to automate a lot of the manual processes within that business flow. So what do we look for when we're looking for founders? So I mentioned briefly the markets that we focus on. We're probably most familiar with Australia, Southeast Asia, Europe, and the UK, which is where the DQ founders are, or the DQ team are from and based. We have started a company in the US. We have one actually that is talking to us now and is thinking about starting something with us. But we're not particularly strong in the US. We have raised capital in the US, but we haven't run businesses in the US ourselves. We do expect that will be a big expansion opportunity to us, but for now we're focusing on where we're strongest. So in those markets, we look for founders who have critically some kind of unfair advantage. So what do I mean by that? We consider unfair advantage to be something that makes this founder the obvious person to be the founder of this company that succeeds. I think this is quite standard in venture capital, but what is it about you that means that you're the right person for this problem? And I think a lot of people who have business ideas, if they ask themselves that question, would realize that they probably aren't the right person to solve that problem. So what we like are people who have identified a problem in a niche that they understand intimately and probably have knowledge of that most other people don't. So I myself have started a company in an industry that I didn't know intimately, and we actually failed as a result of a lot of unknown unknowns. So looking for these founders with unfair advantage, we try to remove these unknown unknowns. And that's, as I said, unique insights, expertise. It could be that they have some kind of technical skill that is required for this type of business. And critically as well, that they have a network within that sector. So if you are in the, I don't know, the garbage collection industry, and you know all the buyers of all the businesses in that sector, and you can pick up the phone and get a meeting with any of them, then that's obviously an unfair advantage over somebody that doesn't know even who those people are. Second important thing is that the founders have identified some kind of pull from the customer. So it's not just that they've thought that that this is a good idea and this is something that the market could use, but that they have identified examples of other people needing this and wanting this, and some kind of evidence of this pull. Affinity to the problem is probably goes with the territory of that unfair advantage. What isn't always obvious is a willingness to sell. When you're a company of one, then even if you are somebody who prefers to work on the product rather than the customer, there is always that necessity to actually go out and sell. And so we're not looking for necessarily natural salespeople, but people who are willing to pick up the phone. So we have a guy at the moment who's based in Germany, in Munich. He's an accountant who became a software developer, and he's now building software for accountants. And he is absolutely not a salesperson, but he has challenged himself to make sales calls. And the best thing about him is that not only has he been making these sales calls, but he's been recording his sales calls and then playing them to us and asking for feedback on how he can improve his sales technique. So not only, so that's the perfect example of the kind of founder that we look for. It's somebody who, he's not necessarily a great salesperson, but he's willing to sell and he's willing to learn. And then some other things that go with, are probably quite common in startup world. Tenacity. If you're not tenacious, then don't even try and start your own company, because it's going to be harder than you think. And if you're the kind of person that gives up easily, then it's probably best not even to try. And two things that we really look for, and this is probably quite personal to us, we know that when we start companies with people, we're in business with them probably for the next 10 years. So we have a very strict no dickhead policy. We only want to work with good people. And so we have rejected founders because we just didn't like them. And at the moment, we have that luxury. And we intend to continue to do that. And also, when we raise capital for DQ, we're a little bit like a venture capital fund, so that we raise external investment to fund what we do, and that is what enables us to acquire shares in these companies. Then we won't accept money from people we don't like either. So perhaps it's not a standard business practice, but it's worked so far. And what do we ask for in return? So we have a very standard structure. We take 20% of every company that we start. We don't have any weird preferences, no weird share structures. We just have the same shares as the founder. We dilute just like they do. We don't have a directorship. But we do have a board observer position. But that's so far that's been entirely voluntary. We haven't forced that through any paperwork. And we ask for a biannual meeting once they graduate from the program and start their business. So we could call that a board meeting, but because we're not a board member, we just have a biannual meeting. And that's generally for us to ask how we can be of use and what the founder needs. And we also ask for a $20,000 contribution towards the cost of the setup of the business. So far, it's cost us about $70,000 per business to set each business up. And when we started and we didn't have any skin in the game cost, every single person we spoke to said, yeah, okay, you can have 20% of my business idea. Yeah, sure. And I get complete optionality to join it if it works and not join it if it doesn't. So we realized that we had to have some founders' skin in the game. And we just thought $20,000 seemed like the right amount. Where we were all based at the time in Singapore, that was about a month's salary for the kind of people that we were dealing with. Could be between 1 and 3 months salary. And most people could afford it without kind of feeling too bad, but it was enough that it would keep them focused. We haven't actually had any problem with that. Most people, the main problem we have is trying to convince people not to quit their job at the first sign of proof and the first sign of that this might work. So we actively encourage our founders to stay employed for as long as possible, and only when we are confident ourselves that this is a business that should be successful do we have that conversation. So it's a 20-20 split. And that's the end of the presentation. I think it's been a lot of fun, and we have covered all kinds of industries, and we don't really specify against any specific industries other than those that are particularly capital intensive. So if there is a need to build hardware, if it's biotech, then we're probably not the right partner. But if it's vertical SaaS, a marketplace, or a productized service business, then we're generally interested. And productized service business is something that we've kind of come up with along the way, because that has been the model that has worked best so far, where there is a vision for a product, but there's a service that can be provided in the short term that can deliver revenue. And that means that a lot of our founders can build their businesses without needing to raise external capital. And raising external capital has become a lot harder in recent years. So that has been our route of preference. But Chris, I think you're back to ask some questions.
Wonderful. Thank you so much. I think let's open to some audience questions first, because I know some of them have some follow-up. So Hanson, I'm sure you have some follow-ups, and then I'll go on to my own follow-up questions.
Can I stop sharing, Chris?
Yes. Why don't you stop sharing so we can see your face as the
Okay.
as the prime.
Okay.
Hanson, would you like to kick us off?
I'll pass one out first. Give me a second.
Okay, great. James, you mentioned that where you're strongest in, are there areas or countries you wouldn't want to operate in, whether you feel that you don't have the necessary expertise as yet?
I'm sure there are. I mean, we haven't done any business in Africa, for example. So if we had a founder in Africa, then unless it was a business that we felt comfortable with go-to-market strategies that we thought could apply in any country, then we consider it. But we always treat it on a case-by-case basis. But I certainly wouldn't say that founders in Africa shouldn't apply. We definitely talk to them and see if there was a way we could help.
The Zulu community is particularly strong in this region in India. Have you explored launching companies in India before?
We have. We've got one of my co-founders, Arjun, is based in Delhi. So we have a physical presence in India. I think what we have found is that a lot of the people that come to us from India are not comfortable with the $20,000 buy-in fee or skin in the game fee. And I think maybe that's because $20,000 in India will go a lot further than it will in Singapore or the UK or Sydney. But we certainly wouldn't rule it out. And we've just signed up a founder in Bangladesh. So from a socio-economic point of view, probably not a huge amount of difference. So I'm sure that it could happen, and we would happily start companies in India. Yeah.
And you did mention you are looking across in terms of the breadth of businesses besides the really intensive ones. Clearly, there are other businesses that may be that some venture firms may avoid as well. But are there specific categories that you also wouldn't consider?
I mean, we won't do any vice, just because personally we don't want to start companies in any areas that are contentious or that we're not comfortable with. But not really. I think it's probably the other way around, that there are probably a lot of businesses that venture won't touch that we will, because I think the big difference is that I think the truth is that most people who want to start their own company would probably be comfortable with a $10 million exit. And that's the big unspoken truth in the venture world. If you take a business like Antler, I know Antler pretty well, and they call themselves a day zero investor, and they're bringing cohorts of people, hundreds of people together to start businesses. And they're basically pushing them down the venture track. They're like, build an MVP, get some initial traction, raise venture money, and then you're off, and then start going down the different series of fundraising. I know lots of people who've gone into Antler, and I know that they would be just happy building a business that can pay them a decent salary and maybe one day exit with a few $1 million. They'd be happy with that. But they can't say that because that doesn't play in the venture world, because no VC will back a founder who has a $10 million exit ambition. There needs to be multiple zeros on top of that. But we will. We love founders that want to build a $10 million business, because we're buying in on day zero effectively. Then a $10 million exit for us is still a 20x return, and so our LPs will love that, and we'll love that, and our founders will love that. So I think that's the big gap, that there isn't really any support available for people who have modest ambitions. I mean, if you can consider $10 million to be modest, but then obviously if you can get to 10 million, then maybe you can get to 20 or 50 or 100. So I think a lot of great businesses are missed because of founders potentially not seeming to have enough ambition at the beginning and not managing to get the support that they need.
I'm going to keep asking questions, but feel free to raise your hand up if you want to chime in. I clearly have a ton of questions. When James and I connected, I immediately invited him to speak to the community, as I found how he's structuring this business of his very relevant to the community. So would want to flush out a few more things during this fireside chat portion. But feel free to raise your hand if you want to chime in and ask specific questions. Given the length of time you've started this, have you seen a bigger uptick based on clearly a lot of the disruptions that's happening in some of the big tech companies, James? Or have you been surprised how much interest you've received over the past couple of years?
I wouldn't say surprised. I think what we've been surprised, the thing we have been surprised about from the start is the quality of founder that we've had applications from. By and large, only really good people seem to apply. I don't know why. We do get some that are just clearly aren't going to go anywhere, but mostly it's credible people, sometimes extremely credible people, from great businesses with good ideas. And so often an application comes in, and we have an application form on the website. The application will come in, and I'll just look at it and think, oh my God, yeah, I don't need to speak to this person. I would definitely love to start a business with them. And so that has been the part that surprised us the most, I think. There's clearly a big market out there of people who want to start a business of their own and aren't quite sure how to get started, or feel that there's something holding them back.
And talking about holding them back, I think a lot of people who have very, very successful careers have something holding them back, launching their own business, even though they can be really successful. Is there anything you would give or share advice based on all the different amazing people you've interacted with over the past couple of years doing DQventures?
Advice to people who are still in their job?
Yes, who aren't sure whether they want to jump into such an opportunity. And clearly, when people have jumped in, they're like, yes, I'm all in, I love this experience, but sometimes it takes a little bit more to get to that stage to build this business, right?
Yeah, well, I mean, some home truths are that it will be a while before you're earning the same kind of money, if ever, to be honest. I mean, if you're working at Google, and some people earning $500,000 a year. I mean, there aren't that many people out there earning $500,000 a year running their own business. But there is obviously a chance. I mean, Google's a bit of an exception, but let me give you an example. My brother runs a large yacht company where the motor yachts that they sell are between averaging probably between $10 and $20 million. And he tells me that they don't have any customers who work for someone else. None. All of their customers are either people who own their own business or famous sports people, basically. And so I know anecdotally that to earn really, really crazy money, you need to have your own business rather than being an employee. But it's not just about the money either. So the people that have been through our program, there's a guy, Rob, who he was a big wig in a global recruitment firm, and now he's running his own business, and he's earning nowhere near the money that he was. But I've asked him many times, if you could go back, would you? And he said, never in a million years. He said, not only am I on the path to building a business that one day I can sell for a lot of money, but I am loving every single day. And I think that is the big differentiator, is the amount of fun that you have when you are every action that you take is for your own benefit and for your own team, the people that you bring on board. Every decision you make is your own. But some other home truths. So it takes you a long time to get to salary parity with what you're on before. I think a lot of people find it, having come from senior positions, they find it weird where they don't have a team to delegate to. So the stuff that needs to get done doesn't get done unless you do it yourself. That's a little bit different because they have our team to delegate stuff to. But we're a small team as well. We're 5 people. So that there is an element of rolling your sleeves up and getting stuff done. Not everyone takes to that equally well. Again, maybe if you've got Google on your CV, this might be slightly different, but it's much harder to raise capital than most people think. And I think a lot of people think entrepreneurship is about having a good idea, putting a deck together, going and talking to a VC, and the VC hoping that they get a chance to invest in you because you're so great. But the reality is that even great people get told no by hundreds and hundreds of investors before they get a yes. And that can be quite soul destroying. And raising capital is not only difficult, but it's soul destroying and not a particularly nice thing to go through. Maybe some of you guys have been through that yourselves, but yeah, so that's another learning. So we tend to try to avoid the capital raising route, because, like I say, our founders are trying to build a business that suits them rather than suits their investors. So we try to get to revenue and profitability as quickly as possible, either without any external capital or with what we call just a one and done investment round. So friends and family and angels, relatively small round, maybe 250, 500K, and then use that money to get to profit. And then once you're profitable, then the landscape changes. You've got some options. And if things are still growing fast, then you can still go the venture route. And we definitely wouldn't tell people not to go that route if they think that they're onto something big. But really, as you guys probably know, if you are going to take venture dollars, then you have to be onto something that's going to be worth 500 million or more one day, or the VC, or you will be a failure, at least in the VC's eyes. And that's not really what I think most of our founders want. This is their last startup, really. If they're 40 now, they're going to be 50 by the time they exit this one way or another. They're probably not going to want to do another startup at 50. Maybe they will, but it's unlikely. So it's really important that they get this one right, and taking the risk that is associated with venture at that stage is, I think, for most of them, not right. So,
thank you. Let's go to Hanson's question. Hanson, would you like to unmute and ask your question?
Yeah, sure. Yeah. Hi, James. Hey, just wanted to ask you, do you guys cover the software product development component as well? And if so, how do you sort of, like price or scope that into your service?
So we do, but we won't. So we don't do pro code for the MVB. So if it's going to be a software product, then we will. I think what I've seen over the years is that with software products, the real value is generally just in one or two features, and whereas the founder's vision has dozens of features, and a lot of people go ahead and build those features from day one, and they just launch this huge complex solution. And even if it works, often the users are really only getting value from a very small piece of it. So we'll spend a lot more time scoping out and finding out what those features need to be, and then we'll try and build just those features probably in no code. So one of our portfolio companies that we've launched is a no code development agency. So we've obviously partnered with them now to launch our software products. But we're very mindful that if these businesses go on to be successful, then they're probably going to need to graduate to pro code. So we've built some relationships with pro code agencies that we trust, and that we can help we wouldn't ever tell our founders what to do, but we like to be there for support. So we've used our experience at building software to find partners that we think are useful and trustworthy. There's been so many horror stories of outsourcing development, or to hire their own team, which is ultimately where they're going to need to end up. And we have got a couple of founders who are software developers themselves, or CTOs themselves. So that in those cases, they'll build the product themselves.
Anson, any follow-up from the answer?
No, just wanted to understand, the scope of the service that they provide. I don't have something sort of lingering that, that I need to work on right now, but I'm just thinking that in the possible near future, if there's anything, at least, this is something I can think of.
Awesome. Maybe James, if you don't mind giving me co-host rights, I actually want to screen share the application, because I think that would be super helpful for people to get your thoughts. What exactly your
Sure, you might need to talk me through that. I'm not that familiar with Zoom.
So if you go to the bottom, there's participants. Go hit participants and then hit my name, and you should be able to I can reclaim host here. That's me. Great. even you're walking me through how to use this. It's awesome. We all can help each other, which is what the company is. All right, look, here's the application, right? Folks, you're going to go follow along, dqventures.com/pitch. Again, the first page, I don't think is that interesting. It's fairly self-explanatory. But after you hit this, you go to tell us about your professional experience. Perhaps you can walk through what you're hoping to get from these questions as a good insight for folks who want to apply in the future. James, let's start with this. Tell us about your professional experience. How extensive do you want it? How long? How short? What would you like to see from this?
I wouldn't want to be too prescriptive. We haven't given too much advice on the site, and I would say most people give a fairly slim explanation of what they're doing. We just want to know what their industry is, how long they've been in that space, what their specific expertise is, and the whole thing is to understand what problem are you solving and why are you the right person to solve it, basically.
I think for each section, it could be an essay of 1 page versus, let's say, 3 lines. Do you want something like 5 to 10 lines, or an essay, or 2 lines?
5 to 10 lines, probably.
Yeah. So 5 to 10 lines of all these. Obviously, this is 2 sentences. Great. For this, I think this is self-explanatory. I was just trying to get some indication for this. So let's say I'm going to put all yes, so that go to next. Submit. I'm not going to submit this. Currently located in. I think part of it is you mentioned already for where your experience is. How do you hear about it? Hey, folks, feel free to say you heard it from me or Zoogla. I think James will realize where you're coming from. So, anything else? Should we talk about application? If not, I'm going to go back to the Q&A, James.
No, I don't think so.
Yeah, great. And clearly with the demand and the flow, it does seem that you do look at the applications and you do try to chat with all serious applications, or at least give them an answer, right, James?
Yeah, so all of us receive the applications, so we don't delegate any of this to junior people within the team. There's only 5 of us, and the 3 DQ founders. We look at every application, and we work with all our founders as well.
Awesome. Terry, you're going to unmute and ask your question.
Yeah, sure. Thanks for sharing, James, and thanks again, Chris, for inviting James for this. I heard, earlier you mentioned about productized business. I'm just curious, like what kind of what's a good example of that that you would consider in your portfolio, and also very interested to understand like how what made you and your team sort of interested in this area.
What made us interested in productized service businesses?
Yep. And also what would a great example look like? Yeah,
okay. So I'll give you 2 examples in our current portfolio. One I mentioned already is Dualix, the company incorporation business. So they are essentially incorporating companies and doing any kind of business admin for companies in Southeast Asia at the moment. And there are a lot of different elements to that. I mean, it's hugely varied and hugely manual business. And they're solving that with some outsourced resource in the Philippines to bring costs down. But they're also building their own tech. And one of those, the core of that tech is a portal for companies to manage their own admin and things like filing with Singapore's tax authority. And so that portal, it's not available yet, but the vision is that can be made available to companies for a subscription, so that they can manage their own tax filings via a portal rather than via a service provider. So for them, it means that they won't actually have to do any work themselves, but they still continue to earn the income. So that's one example. And another one which is slightly different, but the no-code agency that we have a stake in, they not only provide services they position themselves as a kind of technical partner to founders who aren't technical themselves, but so they'll build for cash. That's primarily their business. But when they have downtime, they also build their own products. So they get all sorts of ideas, both from customers, but also from their own experience. And the founder is an ex-founder himself. So he is building micro SaaS products, basically, that he can launch, sometimes with our help, because most of my team's experience is in go-to-market. And so creating some product revenue alongside his service business. So two different takes on productized services. And why we like it, I think I said before, it's just because it takes away the reliance on external funding. If you can launch a service straight away for which there is a need and that somebody is willing to pay for, then it's a fantastic way to build a business. It means you retain 100% of the equity yourself. You don't need to give away money to investors. You don't need to give away board seats. You don't need to report to your investors. Anyone who hasn't started a company before, it seems like the ultimate way of having control and being the master of your own destiny. But the moment that you take money from one person, you have a boss again, even though they're not sitting in an office with you. The feeling is that you have a boss. So productized services businesses, or just a service business, is a great way of circumventing that.
And frankly, sometimes you need a boss. I love having a boss myself, even though I was doing a startup by myself. My co-founder is my boss, is what I always tell him, and he always says he's not. But let's go to Dr. Raphael. Would you like to unmute and ask a question?
Hey everyone, thank you very much for this great talk. By the way, I am babysitting, so that's why I'm just writing very restricted in the chat. Yeah, I had a couple questions. So the first one is about, you mentioned the 6 to 12 months, where 10 is more or less when this happened. What happened if it doesn't happen in this 6 to 12 months? That would be interesting to know if you guys keep pushing, or you guys say, okay, this is like no longer interesting for us, or you have to go to the route of funding. And then the second question would be, is this like more, because I missed the first couple slides, is this like for solo founders who are pursuing something, or is maybe, what if they are already like 2 people and they want to pursue something together? Is this like kind of idea interesting, or is this more like for one person? Thank you.
Well, thank you. So we don't specify. I mean, we set out to provide this as a service for solo founders, because a lot of people were coming to us saying, how do I find a co-founder? And I've had lots of co-founders over the years, and there's good and bad with co-founders. And I have co-founders at DQ as well, so it obviously can work well. But lots of companies fold because of founder fallouts. I think it's 60% of companies that fail, or funded companies that fail because of the co-founders falling out. So it's a huge risk. And so we were saying, well, we can be the co-founder. Ultimately, when you're starting a business, you want to have somebody to go through the journey and the pain with you, and who understands you, because your partner, your wife or your husband, they're not, then as much as they want to, they're never quite going to understand what you're going through. Your family and friends, nobody really gets it like a co-founder can. So there's a lot of value in that. But so we said, well, we can be that, we can play that role. So we certainly set it up for solo founders, seeing that was where the need was. But we've got 2 companies that have co-founders who came in and wanted to do it together. So we definitely don't discriminate against that. And those ones are both working well. One of them's working extremely well. So we would consider both. And then the other question about how long it takes, the truth is that some of our businesses are 3 years in and still aren't out of the program, and we're still helping them. So we're not really that mercenary about the timeline, at least while we can afford to be. And even though we are a business, we're the founders of DQ we've all had some success, and we're doing this partly for the joy of it. So as I said at the start, we're really doing this because we want to help people. We want to help people succeed, and we want to help people not fail, because failure, it can be pretty crushing, especially if you're later in your career. And so if it means that we have to stay involved for longer, then we'll do it. But we'll make that call based on how much hope we think there is. If it just feels like we're flogging a dead horse, then we'll have that conversation. You know, we'll have that conversation after 3 months if it really looks like it's not going anywhere. So every case is different. But if there's light at the end of the tunnel and we go past 12 months, or we go past 24 months, doesn't matter to us. If we think that we can build a great business, then we'll keep at it.
That's great. That's and do you happen to remember if in these two successful cases they were both working at the time of the program?
So it's quite a coincidence actually, but both founders were working in both cases, and when we started, I think we were about 6 months in with both of them. And in both cases, one of the founders got made redundant. So they actually, they actually both chose to start working full time on their startup while their co-founder kept working. It did create a slight tension because the risk for the person who'd been made redundant was so much higher. But they also had a payout, so they felt that they were in a position to do it. But that was really between them rather than with us. We tried to be the person in between, to be the voice of reason. And actually, in one of the cases, the founder who was continuing to work invested $50,000 of his own money in the business to make up for the extra work that the other guy was doing, so that it continued to be fair. And the other company didn't do that, but I thought that was pretty good of him.
Okay, good to know. Thank you very much, because James, because it gives like some clarity about the different structures they could have, right? It's not for only one specific way of doing it, apparently.
No, yeah. I mean, we're still pretty early on. We're only 19 companies in, and obviously we're bringing learnings from each business to the next, but we definitely don't just have one cookie cutter way of starting a company, and it all depends on the founder's preferences and needs. So we try to be flexible, and obviously also because we do have a global approach. We have startups now on 4 different continents. I don't know how many countries, but a lot. And so everyone has different needs, and we're still trying to get our head around the different countries and different regulations and everything that goes with it.
Great. I think Rafaz got our question answered. James, we're at the top of the hour now. Any final things you want to make sure you mentioned on this before we wrap it up for today?
No, I don't think so. It's been great to talk to you. Thanks for the opportunity. And it's nice to see some faces and answer some questions as well. So I appreciate you guys making the time.
Awesome. And so besides applying online, any other ways they can reach out to get questions answered in the meantime, or?
I mean, anyone can connect with me on LinkedIn. I am pretty active on LinkedIn, so beware that your feed will probably be inundated with my thoughts. But if you do reach out, please just write a little message, because I get a lot of people connecting with me and I tend to just click no. Apparently it's good for the algorithm if you don't accept everyone who tries to connect with you.
Right, and final question, how can the Zoogla community be helpful to you moving forward?
How can you help me?
Yes, how can this whole community be helpful to you and DQventures moving forward?
I think I always say that the things I look for are, I'm always looking for introductions to potential founders. So anyone you come across that seems like somebody that you personally would invest in if they started a company, but who hasn't taken the leap yet, I'd always welcome introductions to people like that. And we are a fund, effectively. We're actually not a fund, we're a company, but we operate a bit like a fund where we take investors' money, we turn it into our hours worked, and those hours worked earn us equity in the companies that we start. So effectively, our LPs or our investors own shares in all of our portfolio companies as a result of their investment in us. And so we're always looking for introductions to LPs who are looking for a diversified opportunity to invest in very early stage startups with a global geographical mix. So if you come across somebody or you are somebody who likes the idea of investing in something like that, then I'd always welcome introductions as well.
Awesome. Well, James, thank you for sharing so much during this past hour, and everyone for joining live and also watching this as a recording. And as James said, feel free to reach out to him on LinkedIn. His LinkedIn is just linkedin.com/in/greengym. And I'm sure he'll love to answer any of your questions and get you involved. I wholeheartedly believe what they're trying to build is going to be really popular with not only people where they've been focused on in Europe and APAC, but also in the US. There's so much more potential everyone has beyond just what perhaps their day jobs could be. And everyone knows their day jobs are super important, whether it's healthcare, family commitments, debt commitments, and anything else, and also advancing their own careers. But given with so much uncertainty with where we're going with the economy and everything else, we all need to perhaps explore our other interests as well. And what a great way to do it with DQventures. And thank you so much, James, for giving us this opportunity to learn more from you directly.
No worries. Thanks, Chris. It's been a pleasure.
See you, everyone. See you next event. Bye-bye.
Thanks, everyone.